Welcome to our channel, and more importantly, welcome to another free stock market breakdown video that we release every Sunday at 2 p.m. Eastern Standard Time. In these breakdowns, we will cover the latest news developments that will affect the market, as well as break down the broad market and other instruments for opportunities that may be brewing this upcoming week. Remember to drop a thumbs up on the video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. So we're going to kick things off by talking about the fact that finally the FDA has cleared the Pfizer vaccine so that American citizens can start getting vaccinated. So the plan is for them to start getting vaccinated this upcoming Monday, and of course the market should react pretty well to this. So we've been talking about the positive vaccine news affecting the markets for about a month now, and we've seen the ramifications of that reaction with the markets trading at all-time highs. So I expect this to continue throughout the week as more and more positive news comes out about more and more people getting vaccinated. I believe the more people that get vaccinated, the more positive the news for the markets, and that confirms my bullish bias on the US stock market. The other major story hitting the US news this week is the Georgia Senate runoff race. Now the reason why this is so important is because this race will essentially determine who has the majority control in the Senate. So in the event that the Republicans win, I'm anticipating that the market rally will continue. However, if the Democrats end up taking the majority in the Senate, I do expect there to be some market volatility just because the one-sided government does kind of spook out markets a bit, and since the Democrats are looking at raising taxes, this could definitely have an impact on the market. But in the event that the Democrats do win, I do think that any volatility will be short-term corrections and will just end up being buy-in opportunities to take the rally further. So all in all, definitely expect some volatility to enter the markets, as this will have an impact on the markets when the results come out next year. Now, moving across the Atlantic, we're back on the talk of Brexit. And as of this past week, it looks like a no-deal Brexit will be the more likely outcome of the EU and UK negotiations. So they haven't been able to agree anything bilaterally, and therefore a lot of people are starting to realize that a no-deal Brexit is becoming extremely likely. Now we've already seen some reactions in the currency markets because of this news, but I do expect more volatility to enter both the UK and the European stock markets, as well as the euro and the pound currencies to continue to have increased volatility as the deadline nears closer. Now if they do miraculously end up with a deal, this will be positive for the markets, so definitely keep an eye out on that as well. Last point to note on this matter is the fact that the world's markets are currently fixated on the vaccine news. So even though there will be increased volatility in these pairs, the overall trend will follow the news of the vaccine. And that's just what I've been noticing over the past couple of months looking at the markets. So although Brexit is very significant and will have a long-term impact on the European and UK stock markets, for the short term the vaccine news definitely takes precedence because that's what the markets are focused on solely at this moment in time. Now moving across to our charts and taking a look at the S&P 500, you can see that our trade idea is still currently in play and that we are back at the entry point. Now I only believe that this pullback is just a short-term pullback and that we will eventually achieve our target of around 3,740 points. So if you are in this trade, definitely stick with it. I just think that for those who aren't currently in the trade, this is just another buy-in opportunity. So stay patient and trust the analysis, as my bias is still the same for this trade idea. Now I do believe that the fact that the vaccine is rolling out in the US will be enough to push us at least to our first take profit level. So just keep an eye out on this trade idea. Now moving across to the NASDAQ, as you can see, this trade idea is doing tremendously well for us, and it has similar price action to the S&P 500 in that it pulled back into a significant level of structure. Now I do believe that we will achieve this target of around 12,670 points. So my recommendations will be the same as that of the S&P 500, and that's to trust the analysis, stay in the trade, and wait until our take profit level is hit. The only difference that I would point out is to move your stop loss to below this zone and below the ascending level that we have been inside for the past couple of months, as this will protect the profits that we currently have. But I definitely believe that if we do drop back below this level, then that will invalidate our trade idea. But I do think that that's quite unlikely to happen, as I do believe we will have that continuation off of this zone back up to our take profit level. So stick to it and definitely keep an eye on the trade. Now moving across to everybody's favorite instrument to trade, in gold, we have exactly our trade idea that played out last week. I did mention in my breakdown video last week that I expected gold to have a fake out just because I know this instrument is notorious for fake outs. So now that fake out is completed and we drop back below this zone, I am expecting a retest of both this level here and the major zone for a continuation back down to around the 1812 level. So if you are waiting on this trade idea, make sure you have your entry set at this level so that any volatility that creeps into this market will trigger you in and hopefully get us down to our take profit level. Now because this fake out has occurred, that has increased our probabilities of a successful trade substantially. So definitely pretty confident in this idea, and I will be posting updates on this trade idea to my social media channels, so drop a follow if you don't follow already. Now just to take a look at how our oil trade is doing from last week, we can see that we did actually hit our first take profit level of around $47.80. So now what I'm expecting here is definitely some volatility and possibly a correction back to our entry zone in oil. So don't move your stop loss to break even as yet, just because we haven't fully cleared this first minor zone. So I'm still definitely confident in this trade idea of eventually hitting around $53 in oil. But as I stated when I did first put this trade idea out, I do expect this to take quite a few months. So this is definitely one of our set and forget type of trades. So if you're currently in this trade, definitely hang on if you're looking for this 53 level. For those of you that are short-term traders, you should have been triggered out when you hit the first take profit level. And for those of you who currently aren't in this trade, I will be posting additional entry opportunities into this trade idea as the opportunities begin to present themselves. Now last but not least, for you guys that trade in the currency markets, I have the USD Canadian dollar highlighted here because I do see quite a significant development in this pair that should hopefully play out within the next couple of days. So what I'm seeing down on the lower time frames is that we have reached quite a significant daily zone here highlighted in red in this pair. And so what I'm expecting is a short-term correction back to the 50 period moving average just because of how significant this zone is. So the entry criteria for this trade will be a break, close and retest highlighted here of around this 1.278 level in the USD Canadian dollar. So when we do get the breakout above and the close, be patient and wait to take the trade upon the retest of this level. Now if the retest doesn't happen and we do break above this level and price shoots straight up to the take profit level, don't execute the trade, because that is just decreasing our probabilities of success. If the trade idea works out, then that'll be awesome, but if it doesn't, then we can't cry about it. We have to stay disciplined to our plan and only take trades that come on side with our particular setups that we're looking for. So I'm definitely looking at this trade idea in the USDCAD for around 43 pips, and it should yield anywhere between a 3 and 4 risk to reward ratio. So I'll keep you up to date on my social media if the entry criteria for this trade come on side. Now with that being said, this concludes our market breakdown for this week. Thank you to all who took the time out to watch the video, whether it be in part of it or the entirety of the video. Remember, I post these breakdown videos on a weekly basis, so subscribe to our channel so you don't miss out whenever I upload. I also post educational content that is suitable for both beginner and experienced traders throughout the week to both this channel and to our social media pages, and those links are in the description below. Also, if you found the video useful, support us by dropping a like on the video so that the YouTube algorithm helps us reach more people. Thanks and peace out.